Hi, I'm Scott Mentzer with Orchard Hill Mortgage, and I want to welcome you to the Mortgage Update. So let's jump right into last week's recap. So rates moved a little bit higher last week because of the Federal Reserve and because they raised their rates. But really what affected rates was the chair's, Jerome Powell's, press conference afterwards, and he indicated that that the Fed expects that they're going to have to continue to raise rates higher than what the markets are expecting. Markets were maybe expecting a 0.25 increase in December and February, but Powell is indicating that most likely they're going to be closer to the 0.75, and markets really hadn't priced that in, so that really affected rates last week. So let's talk about what we see for this week. So the big thing that we're going to have this week is the October CPI consumer inflation data, and the expectations are that there will be some signs of inflation decreasing, but we shouldn't really expect it to significantly move slower, or lower I should say. I guess we kind of want it to go slower, but it should be lower. And but they don't think it'll be a great decrease. And we shouldn't really hope for that. That's what we would need to really affect mortgage rates and the markets in general. But most of the indicators and the economic people out there don't think that's going to happen. A little bit, but not a lot. So what the Fed is doing is, helping. A lot of the economists think that it's maybe, hurting the economy, but we shall see what's happening. So what's affecting rates right now? There's the economic data. So the big thing is on the Thursday, the CPI inflation data report. Just talked about that a little bit, and that probably is going to really affect rates. So, and the people that I listen to every day and read about rates, they're saying that they think that's going to hurt mortgage rates. And the other thing going on this week is Veterans Day. It's a holiday on Friday and markets are closed, so lenders will set their rates a little bit conservatively, so it's probably not the best time to lock rates right now. So let's see what's in the news this week that's affecting things. So I have 3 articles that I want to talk briefly about this week, and the first one is that home equity has decreased in the last few months. Since May, they're saying that homeowners have lost 11.7 trillion collectively since May on their home prices. And so, I'm sorry, they haven't lost, it's peaked. Read that wrong. But since September, it started to go down, and it's dropped 11 million approximately since then. Some other things is that prices are slowing. Most analysts think this is just going to be a price correction and not a market crash. So that should be good for the markets and for real estate. Most buyers still have equity in their properties. It's not like they've lost the way they did in 2008. So there's some good things in this article just about home equity, and they think it will stabilize. We're going to lose some, and I've talked about this in the past. The other thing that's really affecting markets is the consumer confidence in housing, and or in the housing market, I should say. And about 16% of consumers still think that it is still a good time to buy, so that's a good thing. 37% though, they expect home prices to drop. So, but and this is based on a Fannie Mae survey. They're one of the buyers on the secondary market of mortgages. Fannie Mae and Freddie Mac are the 2 big buyers when wholesalers and banks, retailers sell their mortgages, most of them are sold to Fannie Mae and Freddie Mac. So this is their survey. They're trying to get a feeling of the markets and what's going on and what people feel as consumer confidence, because that's really a big thing. Sometimes the economy can be doing really well, but if consumers feel that it's not, then it's going to follow suit of what people feel, because people are going to stop spending, and then that affects businesses, kind of a snowball effect there. So again, because of rising interest rates, home buyers have lost approximately $1,000 in their purchasing power, or I should say their mortgages for the same purchase price as 6 months ago or a year ago is costing buyers who are mortgaging their properties $1,000 more per month. So that really limits their buying power. And then because of there's a concern about falling values of homes, how does that affect someone's home equity line of credit? And a home equity line of credit is a way to tap the equity, the value in your house with a lender. And it's kind of like a credit card, but it's better rates, and it's based on how much value you have in your house. So if you had a first mortgage that was $400,000, and you tap into the equity of that, and you only have $360,000. So you're allowed to take out to 90% for equity. So that means that you can borrow $360,000. If you owe $200,000, that means you have $160,000 less. But if prices drop and now the house is only worth $380,000, on that same calculation, you're only going to be able to borrow about $142,000. So, and that's one aspect. But also, what does the lender do if your home loses value? Well, if you've tapped the equity and you have used it all to do renovations on your home, then you're just going to continue paying that. If interest rates continue to rise, then you could have some, your payment could change, because there's usually not a fixed rate for that, for a HELOC. Now, another option is you can do what's called you can do a home equity line. Instead of credit, you just do a home equity loan, and that allows you to borrow, and you can take the cash out and have a fixed rate, and that way you don't have to worry about the lender calling your loan, because they are the two variables. Usually the disadvantages of a HELOC is that you have a variable rate, and then also the loan is actually callable. So if you have a HELOC, then your lender at some point could say, "Hey, we want our money back." That happens rarely. It would be if you stop making your payments, then the lender might do that. Now, some of the advantages of HELOC is that you're going to get a better rate than a credit card. Credit card rates are probably 25 to 29%, depending on your credit score. Then your lender is better than having a rate for a HELOC could be 3 to 7%. So that's some of the advantages. So now the other options you could do with a home equity loan, which is based on the what you're taking money out on your equity, but it's a fixed rate, as I said, and you have a number of payments to pay that off, where usually in a HELOC that's not set. So one of the things is that people think back to 2008, and that the lenders lowered their rates or closed their loans out if they hadn't used the money, because a lot of people will get a home equity line of credit instead of a credit card, and they, will use it, pay it off. And in 2008, a lot of those loans were called because the home values dropped so much, and lenders were concerned about their risk. And but most people don't think that is somewhere that we're going. They don't really see home values dropping that much. So that's a good thing. So just 3 news articles there about consumer confidence, home equity values, or home values in general, and then HELOCs. If you have any questions about any of those things, just give me a call. I'd be willing to talk to you about it, or your buyers. So again, my advice to buyers is kind of still, what are their options out there? I still think it's a great time to buy. So if you have buyers that are looking, or investors, it's probably a good time to find deals. If they're worried about their payments, being higher, there are a couple of things they can do. We've talked about this, the 2-1 buy down in the last few weeks, and that they can buy down their rate with points, put more cash down if they have that. The buying the points and the 2-1 buy down, they can do with seller credits. So they're just some options for them. Again, if you have questions or your buyers have questions, it's always a good idea. Just give me a call. I'm more than willing to talk to you, meet with you and your clients together to go over any mortgage questions they might have. So again, thanks for listening. Scott Mentzer, Orchard Hill Mortgage. Have a great week. Thanks.